How to finance a multi-unit property. Are you wanting to get into real estate investing? Do you want to be an investor, have rental properties, get passive income, but you don't really have a lot of spare cash laying around and you don't know where to get it? Well, again, I was in the same boat. I'm going to tell you exactly how to do it with no fluff. Let's go. So I'm going to give you a step-by-step guide on how to finance a multi-unit property without any hassle, without any headaches, and without getting tripped up by lenders. I'm going to share with you 7 ways to finance a multi-unit property and some secret ones that you probably haven't thought of. And I'm going to give you my dirty little secret on how to get things done quickly. Multi-unit properties are like the best type of properties when we are talking about rental properties. And so many people have been asking me about, Noelle, how are you getting all of these rental properties? Should I be investing in multi-units? What does it mean? What are the benefits? Is it too much? Okay. So I'm going to break this down for you really quickly so that you know exactly why you should be investing in real estate, why you should be investing in multi-unit, and how to know when you're ready. So the first thing, of course, is multi-units are properties that are more than one unit, okay? So a 1-unit property is a house. Most people just call it a house, but in the professional world, we call it a single family residence, okay? It's also known as a single family dwelling or an SFR. But when we are talking about multi-units, it actually can fall into the same category. It can fall into a single family residence because they consider 2 to 4 units still regular residential property, okay? So if we're talking about a multi-unit, we could be talking about a 2-unit, a 3-unit, or a 4-unit, or we can be talking up to properties that are like small, that are apartment buildings that have hundreds and hundreds of units. When we're talking about multi-unit properties, there's really no clear definition if we're talking about in the single family realm or if we're talking about in the commercial realm where we're talking really big apartment complexes. But in either case, there's some real benefits. When I started investing in real estate, I started with single family homes, okay? I was just finding houses, people that had property problems. I was getting those properties under contract and I was flipping those contracts, called wholesaling. Then I started fixing and flipping some of those and started getting $50,000, $60,000, $70,000 checks fixing and flipping. And then eventually I started getting a lot of rental properties and I quit my boring corporate job. So that's my story. That's what I did. But what I did not do that I'm encouraging more people to do is start getting into multi-units a little bit earlier. Now, one of the things that you can do with multi-units and why it is such a benefit for you is I came into a lot of mistakes when I had my single family homes. Each home had to be managed individually. And so that became a really big expense, okay? You needed a property manager for all of the different properties. You had utility bills at all the properties, you know, sometimes taxes, insurance, all of these different things. But if you have a multi-unit, then all of those things are for just that one place. So if you have just using a small multi-unit, let's just say a 4-unit, you know, just like this 4-unit that we're in now, okay? This is a small apartment. There's 4 units. Each of the units has 1 bedroom, okay? Now, when you manage this property, one person can come manage all 4 of these. There's 1 tax bill. There's 1 insurance bill. You get what I'm saying? It's a lot easier to manage if everything is at one place. Now imagine if this was 4 separate houses. That would be 4 separate tax bills, 4 separate insurances, 4 separate mortgages. It really starts to get out of hand and it really cuts down on your profits. So when you are able to get multifamily units or multi-units and you can have all of your tenants in one place and all of your expenses at one place, it lowers your risk, okay? Because if you have a single family home and no one's occupying it, then you have 100% vacancy. But if you have a 4-unit and one of them is vacant, then 75% of your units are occupied, okay? You only have a 25% vacancy. And then you still have income from those other 3 units, all right? So just a ton of different benefits to multi-units. Additionally, with a multi-unit property, financing in many cases is a lot easier, okay? And I'm gonna get into that a little bit later, but just know that there's some tons of benefits. It's less risky, usually higher profits, usually less management, and last but not least, you have the benefit of easier financing. So now we know why we're doing multifamilies. Let's talk about how we're gonna do it. So I'm gonna give you 7 ways right now to finance multi-unit properties, okay? So the first one, and I'm not gonna spend a whole lot of time on this one because this is the one that a lot of people might struggle with, but please stay to the end because I'm gonna give you the last one as the best one. Sorry about that, but that's what we're gonna do. So this one is actually one that I've used and my students still use. Private money. Private money does not have to be with your friends or your family. It can be, and that is one of the things that I recommend is you actually starting to find and create a network of people that are interested in real estate investing. Because like I know, there are tons of people that are interested in real estate investing. The issue is most of them don't know how or don't have the time. So many people do have a retirement account, a 401k. They may have a little bit of money saved and they're willing to invest it. Again, invest, not just give it to you, invest in real estate, some tangible income producing property. Most people are going to be interested in that, but they have to be able to trust that you know what you're doing. So by educating yourself, learning the lingo, learning the terms, and learning what to do with property, you can easily solicit private money. Do not think that you don't know anybody because it doesn't take a lot of money. Most people have $40,000, $50,000 on the low end in their 401k, and you're only asking for $5,000 or $10,000. In many cases, I've had multiple people pull out a little bit of money from their 401k and we bought multi-unit properties. So just know private money is an answer, okay? So that's private money as in people that you know. And then there are private lenders, okay? There's tons of lenders out there that are willing to do some short-term financing or do some personal loans and things like that that can provide you the money that you need either for the down payment or to fix up the property and purchase the property yourself. So know that private money is one of the ways to finance multi-unit properties. Number 2, you can do equity partnering. There's 2 different ways to do this, and this is absolutely phenomenal. I actually almost was resistant to give this one so early because so many people are gonna be like, this is the answer, and just run off, and I want you to watch this whole video. But equity partnering, I have a ton of students that do this now. What you can do, of course, with real estate, because it is a tangible thing and most people do want to invest in real estate and they understand the business a little bit to some extent, is you can actually create a business where you are going to purchase real estate. Again, just get an LLC or S Corp, you just register the business, doesn't cost very much money. And then when you are soliciting people to buy into this, you can give them equity in your company, okay? You literally say, okay, for this $10,000 investment, you're going to own a portion of my business, whatever, percentage you say, and you will split the rental income with them, okay? This is a very easy way to finance multi-units, okay? So for example, say you are buying a 4-unit. And it is considered a single family residence. And there's tons of loans out there, Fannie Mae, Freddie Mac, FHA, where they will finance almost 97%, okay? The loan is almost 97% and you just put down 3 or 3.5%. So you can literally get that money from one of your investors, the down payment, and then you give them a portion of your business and you share the rental income with them from those other units, and you're the one that's going to manage the property, you're the one that's going to do the work, and in many cases you may even put the loan in your name, but they provided the down payment. So this is an awesome way to start partnering with people, getting more people involved, and teaches you how to start raising money and getting money from other people, start having those conversations, and get more and more people involved in your real estate where it is other people's money that is getting you your portfolio built. Number 3, hard money loans. Hard money loans. Many real estate investors are familiar with the term hard money, but I will explain to you what it is really quickly. So hard money loans are loans that private lenders give just for real estate investors, okay? So they do not usually lend on properties that are just like a single family home that you're gonna live in. So this is why it's perfect for multi-unit, because if you're buying, again, using our example, you're buying a 4-unit, even if you're going to live in one of the units and rent out the other ones, a hard money lender, of course you're not going to move into that one immediately, will lend you the money to buy the property and in many cases the money to fix the property as well. And you just have to make interest-only payments to them. And so a lot of times with multi-units, we fixed a lot of them up, we remodel them, make them look really nice and modern, and so that they can make a lot of money, okay? So once you get the hard money loan, they will literally loan you the money to do all of that. They will loan you the money to purchase the property and to fix the property up. And then once you have done those things, you refinance out of that loan. That is why it's called a hard money loan, because the interest rates are a little bit higher, I'm being honest with you. So right now, mortgage rates on mortgage loans are like 3 and 4%. But on a hard money loan, they're closer to 10, 12% in many cases, and it could be even higher depending on your credit. However, they are a lot easier to get because in most cases they lend on the deal, okay? They lend on, will this property be making money? How much will it be worth after you fix it up? What is your experience fixing up property? If you've fixed up properties before and you can document that, it is so easy. Actually, for me now that I've been doing this many years, it's so easy for me to get hard money loans because they make a lot of money doing them because the interest rates are high. So just know that there is money out there with hard money loans. So that's another option. Number 4, house hacking, all right? So this is the example that I said before where you were buying a 4-unit, for example, and you were going to live in one of the units. Again, you can buy a 2-unit, a 3-unit, or a 4-unit pretty easily, almost the same process as you would to buy just a single family home. And so if you're going to go through that same mortgage process and they have those same loan terms where they will lend you most of the money and you're only coming up with, maybe 3%, or in some cases, you don't have to come up with anything. There are down payment assistance programs available. I'll give you a link to that a little bit later if you want to look into that. But again, you can literally buy those homes with almost no money out of pocket, okay? And you house hack because you live in one of the units and then the other units are able to pay those mortgages off. So that is a pretty easy way to finance multi-units, is by house hacking and literally living in one of the units, because then you can get financing at very high loan to values, also known as LTVs, where they will loan you 97% or 100% or 95% of the mortgage. So just giving you a quick example, if you were buying a 4-unit, let's just say a 2-unit, you were going to live in one and rent out the other one. Say you're buying a 2-unit, it costs $100,000. Again, just using round numbers. And you had to put down 3%. That would be $3,000. Now, again, there are down payment assistance programs available to even provide you that $3,000. So literally, you can buy a home for a primary residence, live in one of the units, and then the other unit you manage and collect rent on, and it's able to cover your mortgage. So house hacking has become a lot more popular, but in my opinion, still not popular enough. More people are not doing this, and it is an amazing way to start getting multi-unit properties and having properties that produce income for you. Loans. The next thing, of course, to finance multi-unit properties are loans. You literally can get mortgage loans from FHA, Fannie Mae, Freddie Mac. There's tons of mortgage lenders that lend on multi-units. Now again, if you are going for 2 to 4 units, you will stick with the Fannie Mae, Freddie Mac, FHA government loans. If you are talking about more than 5 units, you are going to be into a different loan category. Again, Fannie Mae and Freddie does make loans on commercial real estate, but the terms are a little bit different and you usually need a lot more down payment, okay? So if you wanted a 10-unit apartment building, for example, even if you were going to live in one of the units, it would still be considered commercial financing, and you're not going to be able to just get down payment assistance and things like that. However, there are some real benefits to those bigger units because obviously the more units you have, the more income that you're usually receiving from those properties because you have more units to rent out. So finding the money and financing even 5 units, 10 units properties, 12-unit apartments is not as difficult as you would think. In fact, I have a whole video on how to get finance for small apartments, and I'll put a link below for you. Number 6, finding for sale by owners and having them do seller financing. So one of the things that I've just love about commercial real estate and multi-units and things like that is that, of course, you have more units, okay? So you have the ability to already see that the property is making money. That is such a big deal because if someone already has a rental property, for example, okay, where you seek out landlords, okay, let me kind of break this down for you, where you seek out landlords, seek out for sale by owners of multi-units, and they can finance the property for you. It's called seller financing. wherein they may be tired of managing the property. We have a lot of older people that are getting out of real estate investing, which is why I'm trying to encourage more of you guys to get in it, because we're going to have a shortage pretty soon if more people do not learn this business and get involved. We have a lot of older people, baby boomers, getting out of it and wanting to do something else or just straight up retire, but they don't want to just give up all of their properties. So many of them, tons of them, actually don't want to just straight out sell it. They want to do seller financing where they keep getting some revenue each month, yet you are buying those properties or you're buying that portfolio of properties from them. So seek out for sale by owners of multi-units, because many of them will do seller financing. You can talk with them, you can deal directly with the seller, you can talk about what your terms are, how you're going to manage the property, what you can do, what your benefits are, and how you can help them in their situation so that they can retire. And number 7, this is the granddaddy of how to finance multi-unit properties today. Okay, this is the fast way. This is the awesome way. Many people do not know about it, and it is real estate crowdfunding. Okay, now crowdfunding has become popular. You've seen people need money for the band or they need money for their school. Well, those are those type of crowd funds, but we have real estate crowd funds where you can literally go to sites like TrueCrowd and you can actually have your own crowdfunding created where you go through and you solicit people to put in as little as $100, $250, $500, whatever it may be. They put that money in and you buy real estate with it, and you split the profits with them. We literally have our own crowd fund that we started at the end of 2019. We didn't launch it until February of 2020, and we literally have over $200,000 raised. We've been able to buy lots of properties, and we're even doing quarterly distributions to our investors. You can do the exact same thing. You can either invest in what we're doing or you can emulate what we're doing. Go to TrueCrowd and you can actually look up what we're doing. My company is NuRez, NuUREZ Inc., NuRez Inc. And what we've done is we've created a crowd fund. We've put it all together. Again, it goes through the Securities and Exchange Commission, the SEC. You have to get vetted by the government and make sure you don't have any criminal background or you're not a financially irresponsible person. And you literally can get your own crowd fund started in really a short amount of time. Like I said, we launched the company officially in February, and at the time of this recording, we have well over $200,000 raised. Half of it, I think there's probably at this time of this recording, there's well over 100 and some odd thousand on the TrueCrowd platform. And then we've gotten some private investments as well. And we're doing quarterly distributions to our investors, sharing the profits from our real estate. So again, you can do this too. And this is the new way to raise money for investments, to new way to invest in real estate, and the new way to start making money in real estate. So hopefully I did not overwhelm you with all of that information, and this was really great content for you. Again, just want to please remind you to go check out TrueCrowd.com and go check out NuRez, NuUREZ.com. We are buying multi-unit properties and we're literally making them short-term rentals. So our profits are through the roof. We are expecting to make a lot more money than we did with normal rental properties. You can read and see all about what we're doing, how we're allocating the funds, what our plan is, and what we're doing. And again, you can invest in NuRez or you can emulate what we're doing. This is Noelle, to your success.